This is Matthew Cratter from Trader University, and today I want to talk about the U.S. election results, the stock market, Bitcoin, etc. If you're interested in learning how the economy and how the markets actually work, so you can make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So I've subtitled this FAANG, the FAANG stocks, Facebook, Apple, Amazon, Netflix, Google, and Bitcoin win re-election. That's what I really thought was going to happen. And it's still a little too early to call here. It's looking from the prediction markets like Biden may have won, but Trump, the way you can read these, 76% chance that Biden's going to become president, 25% chance that Trump will have a second term. These have been flipping a lot overnight, so it's hard to put a whole lot of confidence in them. We have what looks like the Senate, 47 seats on the blue side, 47 seats on the red side. Looks like Democrats are going to maintain control of the House. So we're looking at a Democratic House, Republican Senate, and probably Biden as president. Now, if someone told you this was going to happen and you looked at Biden's tax plan, raising Social Security, payroll taxes for high wage earners, increasing the corporate income tax, which probably has a larger result on stock market valuation, etc., more taxes above the board, you might be surprised. And I had a lot of commentators saying that if it looked like Biden was going to win, the stock market was going to be down 50%. Instead, we see a gigantic rally in the stock market. We see the NASDAQ futures up almost a little more than 3.5%. And what I've been arguing is that it really doesn't matter who is president. Because of various structural things, we need to continue to have huge deficit spending. I've been joking that Jerome Powell is really the president of the United States. Here's a great meme where he's being solemnly sworn in to do everything within his power to keep stock markets inflated. And what we've seen elevated valuations, stock prices, real estate prices, etc. We saw them under Obama, Biden. We saw them under Trump, Pence. And it looks like now we're going to continue to see it under Biden because the real people in control are the Federal Reserve, are the central banks. And the reason for this, we've been sort of backed in a corner as a country and in our use of fiat currency. Simply, we're bringing in only about $3.4 trillion in tax revenue. Official spending has been $7.7 trillion. And what you have under Republican administrations is you have a lot of tax cuts, and you also usually have increases in deficit spending. What you'll have probably under Biden is taxes will go up, but the revenue will not go up nearly as much as the spending will go up. And as a result, we're going to need to see the Fed continue to print money and purchase U.S. Treasury securities to monetize the debt. Basically, one branch of the government is issuing debt to pay for all this deficit spending. Deficit spending is just when you spend more money than you're bringing in. And we're in a situation now where the Fed is the buyer of last resort for these treasuries. Now, the reason this is sort of baked into the cake is this is a chart of U.S. Public debt. So these are all the treasuries that are outstanding. And we can see that it's been increasing. It's hard to know exactly how to draw a line through here. But if we compare this to, these are basically 12-month rate of change. And so we can see, for example, from a year ago, the federal debt has gone up 20%. Now, if we compare that to GDP, which might be a measure of sort of total sales, is one way to think of it for the U.S. economy, U.S. GDP is growing much more slowly than the federal debt. And so you have this situation, it's just like a household where income is not keeping up with the growth of debt, whether mortgage debt or credit card debt. And the net result is you have to continue to borrow more and more. And that's where the Fed comes in. That's where the money printers come in. And that's one reason I joke that stocks are going to go higher, Bitcoin's going to go higher no matter who is president. These tax issues, they do matter at the margins, but what really matters now is a big stimulus bill and lots of Fed money printing. We can see this if we look back at the price of Bitcoin over the last 3 elections. It's kind of interesting. Dan Held has a tweet here. In 2012, I guess on election night or election day, Bitcoin was approximately $10 per Bitcoin. 2016, it was about $700 per Bitcoin. And last night or sometime yesterday, and right now it's still about at the same price, 13,800. So I'm going to go out on a limb. If you use the price models, which I've talked about, 4 years from now, when we have our next presidential election, Bitcoin is going to be somewhere between 200,000 and a million. I think 500,000 is a very good round number here. A lot of people talking about how bad they feel paying having to pay so much for one Bitcoin, but you have to have an idea of where it's going, and you actually have to believe this as well. If you don't believe these pricing models, if you don't have a lot of confidence, if you haven't done the research, you will not have the staying power to hold on to Bitcoin throughout all the volatility. I'll link to this chart here. If we go ahead to election November 4th, 2024, we can see that the stock to flow model has Bitcoin somewhere between, depending which sort of average, trailing average you use, it's somewhere between $266,000 per Bitcoin and $1.275 million per Bitcoin. Now, this can happen even without the US dollar going down a lot. We've seen that Bitcoin has gone from 10 to 13,800. The US dollar has definitely lost purchasing power over that period, but it hasn't lost 99% of its purchasing power. I continue to expect the US dollar to weaken against real assets like real estate, stocks, gold, Bitcoin, which means that all of these continue to go up in real dollar prices. I'll also link to this great article by the Winklevoss twins about the case for $500,000 Bitcoin. And they've said on a number of occasions, you can read this article, that they think $500,000 is actually a very conservative price target for Bitcoin over the next few years. If you don't know who the Winklevoss twins are, they were in the Social Network movie. They were early collaborators with Mark Zuckerberg in Facebook, and it's a very, very tangled web there. But very smart guys, ahead of the curve. They founded the Gemini exchange, crypto exchange, and they're always about 10 steps ahead of everyone else. And so if you're investing in Bitcoin, you're investing with smart people like the Winklevoss twins. Plan B points out in the latest tweet that the 200-week moving average for Bitcoin has now moved up to above 7,000. It's increasing at a rate of about 4% per month. And we can see from the chart here that the 200-week moving average has been really good price support for the price of Bitcoin. And what happens during after a halving, so we had the last halving in 2016, the price of Bitcoin pulls away from the 200-week moving average and begins to accelerate to the upside as we enter the most bullish part of the 4-year cycle. Something similar appears to be happening right here as well. So it's a very exciting time to be in Bitcoin. I like this tweet as well from Willie Wu talking about looking at Bitcoin users on chain. And it turns out that Bitcoin users, the number of Bitcoin users went up even before the PayPal announcement. So I'll link to this, it'll be a little easier to see. But basically this is we can see here how it's steepening. And so we've had an influx of new Bitcoin users even before the PayPal announcement. And now the slope has fundamentally changed. It's much steeper, the adoption rate slope, than it was before. So this is bullish fundamentals. When people say that there's Bitcoins in a bubble, they don't understand that they're actual users. This is very similar to watching Facebook in the early days and seeing the rate of users increase. And what Bitcoin does is it tries to price this in its price, these bullish fundamentals. And so I would say I expect a huge stock market rally here to continue. We're in the most bullish part of the year from October through April. I expect stocks to hit new highs, Bitcoin to hit new highs, and obviously real estate as well to keep moving up. We're still in a very strange economy where a lot of jobs have been lost, a lot of people gotten sick from COVID, and a lot of suffering. But what you have to understand about elections is that these are about the oligarchy. The oligarchy stays in control whatever happens is what's best for rich people for the most part. And rich people enjoy seeing the stock market going up, at least the top 50th percentile. And so whether you have a Democrat in office, whether you have a Republican in office, I continue to expect to see Bitcoin go up because of all this deficit spending, the devaluation of the dollar, and the continuing money printing. If you guys found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.